Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, one of Timer Digest's top-ranked stock market timers. Today is January 3rd, 2021, a new month, a new year. We'll have our yearly outlook shortly here, and I want to point out that we've been trading in over 30 years, relatively new to YouTube, and started our short-term trading service in 2018. You can see the 3-year track record there. Earlier in this year, I moved all of our future trades to Striker Securities, as I average over 700 trades per year. So if you don't want to sit in front of your computer all day and trade like I do, you can check out Striker Securities. They will auto trade our account for you guys. So please remember to hit that subscribe button, and don't forget to hit the reminder bell to get alerts, and also the like button. I appreciate everyone patronizing the channel. We got a lot to cover today. We're going to do some long-term analysis, if you will. So let's get right into it. We've got S&P, we've got gold, we've got Tesla today. On the S&P, we're looking at a daily chart. You can see there's the March primary wave 4 low, and we're tracing out 5 waves to the upside. You can see our target here. We'll go over this with a review later, but we're looking at January, the next turn date, in our Fibonacci turn date sequence, and we're looking for the top of wave 1 here. Okay, so then you can see we'll get a second wave decline, a third wave up, fourth wave down, and a fifth wave up. So let me just get into that time spiral right now, because I've updated that. As you guys know from watching previous videos, this time spiral that we started at the September 2nd high caught every turn date up and down, alternately high and low, through the 11:30, November 30th high, or was that a low? I'm sorry, that was an up. Okay, and this is where we're at a make or break right here between 144 and the 89, because these have been alternating highs and lows, and you can see the 11:30 caught the high with a slippage of +8 days on the cash, and I'm sorry, +8 on the cash, +9 on the cash, +8 on the futures. The next turn date is in the sequence is January 24. So if it's to alternate, it'll make a low and miss the high because the market is higher than that high in December right now, or it's going to skip that high and or skip that low and hit the high. So we'll see. The January 24th date looms. You can see we extrapolated that all the way out into 2022, and that'll show up in our analysis. So let me get back to the chart here. So we're looking at, let me see if I can do this here, and then I'll have a review that shows it to you guys. So we're looking at, and we messed that up. Let's start again. See if we can get on that low. Get our Fibonacci retracement going. That high is not up yet, but we have it at 39.96. That's close enough. You can see wave 2 gives us a 618 retracement. That should be right around 2081. This high here in that Fibonacci sequence should be on or around January 24th, 25 at 39.96. Then we have the 618 retracement, which will either be March 19th or April 23rd. March 19th would be a Fibonacci 55 days from the first wave high, and then the April 23rd would be the next turn date in the sequence that we showed on that Excel spreadsheet with all those highs and lows. Okay, from there we should get a third wave rise. This is our outlook for 2021 and beyond, by the way. Okay, so let's just get that there, and let's say we decline there. Okay, there is our 618 retracement for wave 2. Okay, and that shows us a wave 3 target where 3 equals 1. That should be at 46.68, and that date in the sequence is September 14th. Okay, so that's what we're looking at if that turn date, Fibonacci turn date sequence continues. Of course, more likely would be a 1.618 extension for third wave, which gives us the target of 58.06. Again, we're looking at September of 2021. and this is going way out, but a fourth wave retracement here, and let's just get rid of this retracement here, remove that, let's get out, and let's do that Fibonacci retracement of the third wave, which begins here, and let's just say it ends there at the 1618. You can see that retracement there gives us 46.68, the previous third wave high. 50% gives us 43.48, okay? And if, interestingly, we just do a retracement of the 1-to-1 ratio for wave 3, we can get a different target for wave 4. We'll just have to see how wave 3 plays out. Interestingly enough, we're looking at this long-term 39.96 high, right under 4,000. We've had that for months for our target for this first wave up from that low on from the March low. That would be a completed 5-wave pattern. If wave 3 just becomes a 1-to-1 multiple with 1, that gives us a target here, and the pullback is right at that 39.96 high. That would be a 382, and as you know, wave 4 cannot go below the wave 1 high, so that would be interesting. That's why it seems like wave 3 would more than likely make a 1.618 multiple, but if it only makes a 1-to-1, the wave 1 high would be the make or break for the fourth wave decline. Okay, and then we'll worry about wave 5 up later. But that's our long-term outlook for 2021. I believe I may have that here. Yeah, here we go. This was put out to our paid subscribers to our newsletter over the weekend before today. You can see here again, there's that fourth wave low. Our long-standing 39.96 target prices are in red. Dates are in black. We'll see if this Fibonacci turn date spiral continues, but we're going to extrapolate it out as if it is. Okay, there's our wave 1 high, then we'll get a second wave retracement, and there's our 2 dates. Again, one is 55 days from the January high, and one is the next date in the Fibonacci time spiral sequence. Okay, again, normally a second wave is a 618 retracement, so we're looking at a pullback to 2881. Here's our 2 wave 3 highs. One is where 3 gains equality. One is where 3 gains a 1.618 multiple. And there are our fourth wave declines. This has taken us well into next year. So 4s are long and sideways by nature, so we'll see how that plays out. But that's our long-term ideal Fibonacci price and time targets. That's our outlook for 2021. A rise here into, believe it or not, right near Inauguration Day. Then a sharp pullback in 2. Huge up in 3 to last the spring and summer and into the fall. And then a pullback that'll last a long time. That's our long-term outlook. That's the S&P. And let's move on. Let me make sure I didn't have anything else. I think I may have had something else with the S&P. Yeah, here's a little more short-term outlook. The subdivisions of this fifth wave, we've had a wave 1 of minute degree and a wave 2 pullback. Wave 3 should take us to target 39.23 first. Obviously, we'd have a fourth wave pullback before we get to the wave 5 target. Again, 39.96. Let me see if I left anything out with our S&P. Here again is a summary of the targets once we pull up and, once we finish the 5 waves up on or around January 24, 25. I think January 24 is Sunday. Yes, it is. So that's why we pulled that over to the 25th. The market cannot top on a Sunday when it's not trading. Okay, there's our second wave retracement targets. We chose the 618 because it's the second wave. They're usually larger pullbacks. Of course, if it hits one of these targets, it'll change our wave 3 high. So again, we are extrapolating way out, but this is more near term on the S&P. Let's see, do we have anything else we wanted to do with the S&P? I think not. Let's move on to gold. Gold hasn't changed. You can see our 5 waves up, or 3 waves up from the March lows. Our make or break for wave 1. Our descending triangle, flat bottom, descending top, and then our throw under in wave E. We can draw out that that A, B, C, D, E triangle, if you will. There's A1, there's B up, there's C down, there's D up, and there's the throw under in E. Get that off of there so we can see it a little better. Yeah, we'll just keep it right there, which completed 4, and you can see from that fourth wave low, we're moving up. I think we showed before that if 5 equaled 1, it would be a double top right near the third wave high. We can do that here real quick. Let's look at it again, and I believe we had another target on a 1618, which is more likely. Yeah, there's where 5 is equal to 1 at 2079, and the third wave high was 2075, a virtual double top, and the 1618 target 2273. Okay, I'd like to break that down a little more closely, so let's get into an hourly chart, and let's look at this. Bear with me, I get to that fourth wave low. There we go. We can look at this more closely on an hourly basis from that fourth wave low. You can see a series of first and second waves with the wave 1 up here. Let's do a retracement and see what that second wave retraced. It's not exactly accurate. I'm getting close to that top, but we are looking at, there we go. That would be 1 up, 2 down. Here, we'll do it for you guys here. Let's get a 1, 2, 3, 4, 5 on this. Okay, so this would be the bottom. That would be 1 up there. That would be 2 down there, and then we're starting to get 3, 4, and 5 up here. Okay, so that 1 would be up there, and the 2 is a 618 retracement. So we're in wave 3. We'll see how this goes. That looks like 1 of 3 and then 2 of 3. Let's wipe this out and do a retracement of the beginning of that third wave. We get down here, see what that is. 1 of 3. Let's do a retracement of this. This would be a subdivision, and there is 1 of 3, and you can see the retracement there is between the 50% and the 618. So this thing should start taking off. We have 1 up, 2 down. That's 1 of 3. That's 2 of 3, and this should be 3 of 3. This should start accelerating soon. Okay, again, our make or break is that wave 1 high way back here around 17. I think it was 64 or 65. That should hold, and this should start expanding and extending within itself. 3 of 3. Okay, should be very powerful. We'll see how that plays out. Again, here's our make or break way down here. We've already had 1 wave up, second wave down. Now we're looking for a 3 of 3 in gold. And let's get to Tesla. Tesla. From our fourth wave low again on October 30th, you can see a first wave up, a second wave down, a third wave extension. And let me get into that real quick if I can. Let me get into these extensions here, because this has been parabolic to say the least. Okay, we can look at the first wave here, second wave down here. You can see wave 3, it didn't gain equality with 1. It didn't gain a 1.618 extension of 1 or 2. It was close to a 3.618. Okay, so it just keeps going and going. Then we have 4, then we have 5 developing here. So we can see there's 1, 2, and 3. 3 with a near 3.618 extension. And if we remove that and try to find out where is 5 going to go. Okay, we can get our extension here. We can get 1 up there. We can put this on the 4 low. If I can get it on there, there we go. And you can see 5, just to gain equality with 1, would be lower than 3, so that can't be. There's the 1618. Everyone who thought it ended here was wrong. That's December 18th high. That was that wave 3 high in the S&P, internal wave 3. Tesla's mirroring the S&P for what's it worth. Here we have wave 5 gaining a 2.618 at 758. And I believe our 3.618, we've got to allow for that because that's what 3 did, is 831. So Tesla just keeps giving and giving and giving. And I think I may have a summary of Tesla on here. Yes, I do. Here we go. There's that fourth wave low. There's 1 and 2. There's 3 at a 3.618 multiple. There is 4. There's our 5 targets. 5's not going to gain a 1 or a 1.618. It's probably going to gain a 2.618 multiple. There's the 758 target, and there is the 831. Happy New Year, everyone. Hope you guys have a great, healthy, happy, and prosperous 2021. And until next time, take care, everyone.